All right, welcome back to Liquid Lunch. It's coming at you live. It's the 15th today, right?
Yeah.
Janette?
All day.
All day. It's one of those days. Okay.
See, here I am. I'm throwing you off again.
Yes, you are. You're throwing me off. But we've got Joanne Petrantonio here and Rebecca Lachetta from Beat the Banks.
No, Mortgage Intelligence.
Beat
the Banks is Rebecca's website.
Oh,
yeah.
Oh, okay. So you guys are beating the banks with Mortgage Intelligence,
with
right?
Mortgage Intelligence, right.
Right.
Okay.
Right.
So,
Great.
and Rebecca, you're a mortgage broker,
Yes.
and Joanna, you're a mortgage agent. How does the two of you, like, you both have expert knowledge? How does it fuse?
How does it?
Fuse together? Like, what is you're a broker and you're an agent. What's the differences and how does it fuse?
Not a big difference, actually. In Canada, mortgage brokerages run like real estate companies. So the mortgage brokerage is Mortgage Intelligence. A little bit more educational requirement to become a broker as opposed to an agent, but all the same background and all the same abilities being a broker and an agent.
I see. So with your website, which is really cool, beatthebanks.com, right?
.ca.
.ca. So my question is, what do you guys do as mortgage intelligence to help the clients in not necessarily be better or than a bank, because I'm not trying to bash the bank, but what do you do that's different than the bank, and what do you bring that's better or different to help the clients in terms of your resource?
I think the main difference is the amount of choice that you get with an agent. We have 50 lenders to choose from. We can go in and out and also understand the client, take the time to understand the client a lot, offer even private mortgages, things that the banks sometimes aren't able to help you with. And also we're there in the long run. We don't get transferred to other branches. We're there from start to finish.
So when you're looking for a mortgage agent, or if I was looking for an mortgage agent, what would I be looking for? Why would I want to come to you and work with you? What kind of things would I be looking to achieve?
Well, first of all, we would take the time to get to know you and you get to know us. There has to be a trust factor that you want to really understand the client's needs and their whole picture, financial, their goals down the line, where they stand in their lifestyle right now, where they want to be, and so that we can help them devise a good mortgage strategy from start to finish.
Okay, what might that look like? What would be a good mortgage strategy?
It's on a case-by-case basis. We really need to look at where you are in your life cycle. A lot of times people aren't asked, are you going to be having children? Not that we want to be nosy or that's going to deter anything, but just to make the best decision, to help you make the best decision for your mortgage finances. So we really need to understand where you are, where your goals are going to be, what needs to be done to make it right for you and to make it manageable for you.
Plus, I think the other thing, if people, in the old days, people would just go to their bank, right, to get a mortgage.
Yes.
Right?
Yes.
But there's no competition there, right? It's the bank is just going to give you whatever rate that they have, and you take it or leave it, whereas you guys are able to shop the market and really work on behalf of the person looking for the mortgage, right?
Yes, consider myself a matchmaker or a personal shopper, negotiator for you. We both do that on a regular basis, actually. Sometimes we're made aware of certain institutions that have a good deal for the next little while, and if our client is that fits our client and they're comfortable with it, then that may be the route to go. But we will always do what's in the best interest of our clients.
Like, do you do stuff that the client isn't even looking for something, but that one of those specials comes along and you go, oh, that's perfect for so-and-so, and then you let them know about it, and the next thing you know, they've saved thousands and thousands of dollars?
Absolutely, absolutely. We'll let them know that, you know what, this is a really good institution to work with or a lender to work with, and by the way, you know, the criteria is there where you will save some more money. As long as it fits, it has to be client first, because it's not always about the rates.
So let's talk trends. What's happening in the mortgage world today that we need to be aware of in terms of rates and things like that?
Well, there's a spread between the variable and fixed. We're looking at about 61% of the population goes towards the fixed rates. Variables can obviously change from time to time, and they do. We're at a great spot right now in Canada with rates at variable rates at prime minus 75, which means 2.25 right now. But you have to be able to sleep at night. You have to crunch the numbers with a mortgage agent to make sure that you qualify and you can sleep at night should the rates go up. That's probably number one.
So you're saying about 60%, 61% of people go for the fixed rates?
Yes.
Do they?
Yes.
That's actually, I'm surprised because the variable rates are so low right now.
They're low, but you have to look at the whole picture. There's a lot of people that do not want to worry about what's going to happen, or that they're on commission and they want to know this isn't going to change.
Mm-hmm. Mm-hmm. And I wonder how many people remember those bad old days of the early 80s when the interest rates went to 20% or more?
22, 24%.
Yeah. And that just caused havoc in the housing market.
Yeah. My first month in the banking world, I was very young, started as a teller. My first experience was keys being dropped off for houses, bankruptcy notices. It was a really tough time.
Mm-hmm.
The interest rates today, a 5-year fixed rate mortgage is about 3.49%, and these are 50-year lows.
So you think variable rates are low, but the fixed rates are historically low too, I would think.
Exactly,
right?
Yeah.
Where do you think interest rates are going? Is there any, do you guys have a crystal ball at your office where you can figure out where we're going?
No. No, if we did, I think we'd be on a beach somewhere.
Absolutely.
Obviously, we're historically low with interest rates. They have to go up at some point, but I don't think in the near future. Most economists are saying the Bank of Canada won't be changing their key lending rate when they meet in December.
Mm-hmm.
If there's going to be an increase, it'll be a small increase later next year.
Okay.
What do you think is going to happen with housing prices? We've seen, a pretty high, ultimate high. Do you think you're going to hold that value or drop significantly, similar to what happened in the 80s?
Well, what we've read is that they're pretty stable in the GTA, but it's on sometimes neighborhood by neighborhood could change. You need to talk to your real estate specialist about that. I know what we see in our area. It's pretty stable right now. They do predict a slight increase, but I would talk to a real estate professional about that.
Oh, and do you believe that the economy is solid? I hear it both ways. The Canadian economy is solid, yet we're infiltrated with American TV, so we think that it's not. We think our economy is their economy, not so. Do you think that we're solid, or do you think we're at risk for having a
correction in the marketplace?
Yes, or a housing crunch. Foreclosures, like what happened in the U.S.
Well, most of the foreclosures in the U.S., 50%, are due to medical bills, from what I understand.
Oh, wow.
So there's one big difference here in Canada, and our banking system is very solid, the envy of the world.
There was a thing, I think I saw it last week on Simpatico or something, where they were talking about, is the Canadian housing market overvalued? And I think they did a list of countries, like a top 10 list of countries that were overvalued in terms of housing prices, and I think Canada came in at number 7 or something, that our houses, for some, I don't know how they even figure this out, but 23% overvalued in Canada. I mean,
for a world-class city, I think Toronto specifically is probably undervalued.
Yeah.
I don't think in Canada the house prices are overvalued, and I don't see a crash in house prices in the near future.
I mean, this is sort of a theoretical question, but part of what determines the housing prices is the availability of money in the marketplace, right? So if mortgage lenders are lending money and that money's available and people are willing to buy houses and take mortgages, then, the market will continue to rise or won't crash. But if all of a sudden mortgage lenders withdraw money from the marketplace, that's going to cause a crash in the marketplace. Kind of makes me question whether or not the banks and other lenders have a conflict of interest in terms of when they go to repossess a house and the market's crashed, and did they play a role in it by withdrawing money from the mortgage marketplace? You guys want to comment? I know you probably don't want to comment on that, but
Well, I'm an internal optimist, number one. And the cases of Canada, that happening in Canada,
Yeah.
are so slim. Also, CMHC has come to the rescue of some, last year was 800 homeowners that have been in a crunch, and actually rescued the homeowners. So we've got a cushion, and we've got a better job stability, and so why people wouldn't want to invest in Canada in our market is kind of questionable. I think we're in good shape.
okay. Now,
Oh, sorry. I
Sorry,
was just
Janette.
going to say, how common is it for the clients that you work with to actually have more than one mortgage? Say on a main property and then perhaps a second property like a cottage or something like that. And is it advisable to carry two mortgages?
Well, there are certain criteria that we have, and we'd always make sure that you can afford it when you come to us. We'll crunch the numbers with you. First of all, you have to qualify, and so, there's kind of a mathematical thing we do. And also the litmus test is, are you going to be able to sleep at night having this? Are you going to be able to maintain this? And what's worst case scenario? I will ask my client, think of what's the worst case scenario. Can you live with that? Can you live with that second property having to be sold or rented? And if the answer is yes, then we forge ahead. The control is it with the client, what they want.
Okay, but so here's another good point then. If they did have a second mortgage as a second property, maybe it's for income. Maybe they could rent it out and use it as a way to make more income. Do you do a lot of that? Do you see a lot of that?
In our area, yes. Yeah, there's a lot of people in the GTA that like to escape up to the Muskokas or have a condo that they rent out. It does, yep, it's pretty common in our area.
I want to ask. We've seen a tightening of the rules for first time, well, maybe all mortgage people, and you guys were on the front lines having to deal with that whole situation. I mean, what did you learn from that? Is that did you find that people are able to jump over those hurdles even though they're a little bit higher than they used to be?
For the most part, the lending criteria got really lax here in Canada.
It has gotten.
They did.
They were lax.
They were
yeah.
very lax for a while. So the tightening up was a good thing.
Yeah.
And for the most part, the tightening is qualifying somebody with less than 20% down on a variable rate mortgage, qualifying them at a higher rate, so that when rates do rise, they will be able to make their payments. That was part of the problem in the States when the rates rose. People on variable rate mortgages could no longer afford their payments. So we have a lot better controls here that were needed. We've reduced the amortizations from 40 years to 35. And the other main change was rental properties that you were just talking about. Minimum down payment required now is 20%, whereas a year ago you could buy a rental property with as little as 5% down. So it is a little riskier, like you said, having a second property, but there are rules in place to make sure that people are able to afford.
Do you think it's affected the marketplace at all? Because obviously, if you've got fewer people that qualify for mortgages, theoretically, there's going to be less demand, less upward pressure on the prices.
A little bit, but to be honest, this was a really, really good year for mortgages, for sales. So.
Yeah.
It maybe affected a lot of people purchasing second properties, but yeah, as a whole, I don't think that it has really affected the housing market that much.
I just would like to have one last question, and that is, who's your ideal client?
An ideal client is someone that will divulge their information. I say you have to be financially naked and honest for me to help you the most. That would be the ideal client, somebody who's looking for a new property, refinancing, renewing their mortgages.
It's one thing to be employed and to have T4s and stuff like that, but then what about your self-employed people who, on the one hand, they're trying to hide income from the tax man, on the other hand, they need to show income to qualify for mortgages. Are you able to kind of walk on both sides of the fence for somebody like that?
Yeah, there are definitely programs available for self-employed people. you're self-employed, you may have to put a larger down payment. You really have to have good credit, but there are definitely ways around showing qualified income.
Yeah.
Yeah.
Okay. So basically, anybody who's looking for a house is your ideal customer, really, right?
Yes.
I mean, because you can work for them no matter what their circumstances. I mean, you're going to ask for their information, and they're going to need to divulge it for you to be able to help them. But, you know, if they're looking to get a mortgage, I mean, you guys are the people to go talk to, right?
Absolutely. And again, being a broker, we're not stuck to one bank's policies.
Yeah.
We have multiple lenders with some specialized in self-employed and, you know, maybe less than perfect credit.
And you deal with other than just banks as well, private lenders and that sort of
Private
thing
lenders,
as well?
non-traditional lenders, or
And what about mortgage on non-residential? Do you guys get into
Commercial?
that at all? Commercial or even cottage properties, maybe before the cottage is built, i.e. vacant land? Do you do that?
vacant land is a tough one, but usually you'd be looking private financing for private land, for vacant land.
Yeah.
Or construction financing, assuming that's
Right.
the plan.
Okay. So pretty much whatever their situation.
There's a
It can't
mortgage
hurt.
or loan for you.
Yeah.
Yeah.
Okay. Great.
How do we get in touch with you?
You can call our office at 905-755-0874 or the website.
Yep, it's www.beatthebanks.ca.
Okay, great. Thanks so much for being
Yeah.
here.
Thanks, guys. Joanne and Rebecca from, well, the website's beatthebanks.ca, right?
Great.
Mortgage
you.
Intelligence.
Thank
Okay.
you very much.
Thanks, guys. Well, we're going to take a little break, and
Come back with Mark Halpern from
Yes.
Critical Illness.
absolutely, we'll be
Okay.
right back. Thatchannel.com.
Illness protection, rather. We're talking about critical illness.